Hi, my name's Andrew Schiff. I've been an accountant for over 30 years, and I've taught literally hundreds of people how to use QuickBooks. What I'd like to do for the next few minutes is share some ideas and insights with you to help you learn how to use QuickBooks as effectively and efficiently as possible and produce accurate financial statements for your business. The first thing that I'd like to talk about is the accrual basis of accounting versus the cash basis of accounting. The accrual basis of accounting and financial statements produced under the accrual basis of accounting are the most complete. They contain all of your accounts receivable, that is to say all the sales that you made to customers on credit and you're waiting to collect the money, all your accounts payable, that is all your unpaid bills that have not yet been paid, and also all the inventory that you have on hand. The cash basis of accounting, on the other hand, is a little different. Under the cash basis of accounting, we don't record income until we actually receive a payment from the customer. And we don't record an expense until we actually write a check to pay the bill. So the cash basis of accounting, or financial statements produced under the cash basis of accounting, don't contain any accounts receivable, and they don't contain any accounts payable, because again, we don't record income until we receive the money from the customer, and we don't record an expense until we actually write a check to pay the bill. Some business owners like to see their financial statements on the cash basis of accounting. The most frequent situation for that is they want to transfer cash basis financial statement information to their tax return because under certain circumstances, tax returns prepared under the cash basis of accounting can result in a lower tax bill. So there are certain situations in which you might want to see your financial statements under the cash basis of accounting. QuickBooks has the ability to switch your financial statements from the accrual basis of accounting to the cash basis of accounting under the Edit Preferences menu. But I found from experience that sometimes QuickBooks doesn't always do that correctly, probably because the business owner has made some mistakes in the past in recording transactions that affect accounts receivable or accounts payable or perhaps inventory. So what I would recommend is that when using QuickBooks, you prepare your financial statements on the accrual basis of accounting by entering all your sales on credit and all your unpaid bills, which is the way you would probably want to do it anyhow, and then work with your accountant or your bookkeeper or your tax preparer to switch your accrual basis financial statements to the cash basis of accounting, which they can easily do either by hand or on a spreadsheet, and that's the best way of assuring that financial statements prepared under the cash basis of accounting, perhaps for your tax return, will be as accurate as possible. The next thing that I'd like to talk about are certain types of transactions that require accounting expertise. There are certain types of transactions which, from experience, you should not attempt to record into QuickBooks unless you're absolutely certain that you have the accounting knowledge and the skill and the experience to do so accurately. The first category of these types of transactions is entering opening balances for some of your accounts as of the start date of your business. In a previous video, we talked about the start date. It was the day on which you transferred your accounting records to QuickBooks. And again, it's tricky to enter the opening balances for certain accounts into your accounting records as of the start date. And so I would work with an accountant or bookkeeper or tax preparer or rely on them to do that for you. The second category is certain types of month-end or year-end adjusting entries, such as depreciation, amortization, accruals, deferrals, write-offs, and so on. Those are transactions that should normally be recorded by your accountant or bookkeeper or tax preparer unless you feel comfortable enough to do it yourself. And the third category of transactions that I would not attempt to record into the accounting records unless I was really clear on how to do it correctly is transactions between the business owner and the business. By that I mean business expenses paid by the owner on the owner's personal bank account or on the owner's personal credit card or out of the owner's personal money, such as out of the owner's wallet, or going the other way, personal living expenses paid for out of the business checking account or out of the business credit card. So again, transactions between the owner and the business expenses paid out of the owner's personal money or credit, or personal living expenses paid for out of the business require some accounting expertise to record correctly. Not only are these transactions a little bit tricky, but they're affected by the choice of entity. That is to say, whether the business is a proprietorship, a partnership, a corporation, a limited liability company, and so on. So for these three categories of transactions, I would recommend that you work closely with your accountant or bookkeeper or tax preparer, or perhaps just make a note of these transactions and have your accountant, bookkeeper, or tax preparer do them for you to make sure that your financial statements are as accurate as possible. If you'd like to learn a little bit more about these and other topics in QuickBooks and see a tutorial that shows you how to set up and use QuickBooks to create the accounting records for a typical business, I've created a set of training DVDs, a 2-DVD set called QuickBooks Companion. The website for QuickBooks Companion is at the bottom of your screen. You might want to take a look at it. And thanks for listening. Okay, that was good. I think that was good.